If you didn't notice, everything is at or very close to all-time highs. Stocks, crypto, you name it, it's been a really good year for investors. But I was thinking to myself, with everything this high, should we still be investing our money, or should we wait for things to cool off a bit and then invest at lower prices? So I did some research. Let me share with you guys what I found. Just to give you guys some context, my strategy for investing is to dollar cost average, or DCA, which essentially means that I will invest a certain amount of money in a set period of time, regardless of what price is doing. So whether prices are going up or prices are going down, if I say to myself, I want to invest 500 ringgit a month, I will continue to do so. But when prices go up this high, when stocks, when crypto, all these things are at all-time highs, it's normal for people, including myself, to feel like, maybe we should hold off a bit, maybe we should wait. No one likes to invest at a high price, at an all-time high, and then tomorrow, next week, maybe even next month, a crash comes, knowing that we could have bought at cheaper prices. And there's always a lot of news going around about how, a market crash is coming. It could be due to wars, it could be due to Donald Trump being president, or maybe just things are a bit too overheated. So maybe, it's very normal for us to feel like, maybe we should just hold off a bit, wait for a while things are at all-time highs, wait for it to drop before we start to invest our money again. But we know that market timing is very hard, and we know that in most cases it doesn't work, especially when we talk about US stocks. It's almost always at all-time highs, right? So that wouldn't work. I'll talk more about this later on in this video. But first of all, I want to share something that might seem a bit, I guess actually it makes sense. Basically, when something is trading at or near its all-time high, it's actually bullish. It's a good thing. So instead of being scared, we should be investing more money, right? This is my approach when trading, at least. Whenever we want to trade and we're taking on a momentum strategy, we want to see that stock doing very well, being close to all-time highs before we decide to take on the trade, because that means there's a lot of momentum going on, it could go higher. But for some reason, I just can't take the same approach for investing. For investing, I always want to try and bargain. I always want to try and get the best prices possible. Just think about it this way. So when something is at all-time highs, literally every single investor is in the money. So let's say right now, Bitcoin is close to $100,000. Let's say it's at $100,000. It's at all-time highs. Literally every single person who owns Bitcoin right now, they are in the money. So now they're feeling bullish, they're feeling confident, they will continue to hold on. But imagine if Bitcoin price now drops to $50,000 or even 60, 70, 80, whatever it is. There will be a lot of people who have bought at a higher price who are now in the red. They're currently losing money. I'm sure you guys have a friend, or you guys have heard people say this before. They would say things like, oh man, now I'm losing money on this Bitcoin investment. As soon as it gets back to my average cost, I'm going to sell everything. So because of that, it will also create sort of a sell wall as prices go up, which will make it basically harder for prices to go up. So yeah, if we are at all-time highs, there's no resistance. There's no one who is losing money who wants to sell at a higher price. Whereas if we're in a bear market, if prices start to fall, then there are a lot of people who bought higher and higher and higher who are waiting to sell so that they can get rid of their loss and start all over again. And then there are also the fact that, hype just brings more hype. If we look at crypto right now as an example, things are really bullish. There's a lot of talk about how Bitcoin is at all-time highs. It's going to push even higher, and it just brings more people to invest their money as well. This works the same for stock markets, for gold, whatever it is. Even for me, myself, when gold was making such a big move in the last 1 year, I finally realized and decided that I should invest at least some money into gold. So yeah, hype will bring more investors, and basically hype only comes when prices are at all-time highs. So this basically shows you guys, and shows myself as well, that prices being at all-time highs, it's actually a good thing, and we shouldn't really be thinking of selling or even stopping our investment. Before I get into the rest of this video, if any of you guys want to invest into both Malaysian and US stocks or ETFs, or even crypto, you can buy crypto via ETFs now, then check out Mumu Malaysia. They are one of the best brokers for Malaysians right now, in my opinion, and they're also regulated and licensed by Securities Commission Malaysia. But one of my favorite features that they have right now is something they call Smart Safe. So essentially, this is a money market fund that will pay us around 3.5% if we invest into the Malaysian ringgit one, and around 4.3% if we invest into the US dollar one. But the major benefit of this money market fund is that it's extremely liquid. So let's say you put some money in there. If you want to redeem that money, usually it will take around maybe 1-2 days for it to reach your account before you can withdraw that money. But if you want to use that money to trade, apply for IPOs or just invest, you can do it immediately. You don't even have to redeem it from your money market fund. Moomoo will allow you to directly use that cash to purchase a stock whenever you want. So yeah, it basically means that if you guys want to invest your money into stocks, you can do it immediately. But if you don't see any opportunities right now, let's say you don't want to follow my advice in this video, you want to wait for a bear market first, at least your money is earning you some interest. So yeah, if any of you guys want to sign up, then use my link. I'll leave it down below in the description. You will get some nice freebies just for signing up and depositing. And when you make your first deposit, search for enhanced deposits and put the code TMF1 so you'll get an extra 40 ringgit voucher. Anyway, let's get back to the video. So before I talk about whether we should continue investing into the stock market when prices are at all-time highs, I just wanted to show you guys some data. So this chart is of the S&P 500, and every time it's at or close to all-time highs, it's marked in red in this chart. So we can look here, right, on an eyeball test, it does look like stock markets are nearly always at all-time highs. Just based on my eyeball test, it does seem like at least 50% of the times it's close to all-time highs, but according to ChatGPT, it's 33%. So let's just trust them. Now, having said this, should we be waiting for those periods where it's not marked in red? Should we be waiting for bear markets before we invest our money? It sounds good, right? On paper, you don't invest your money when prices are high, you wait for a bear market, a 20% drop, and then you invest all your money. Surely, you will be more profitable than someone who just continuously invests, right? You're buying at better prices, your upside is a lot more. Imagine if you only bought during major bear markets, so times like 2008, 2020, or even a 20% drop in 2018. You would have been up a lot of money. You would have been really in the green, and that seems like a good thing, right? The thing is, like I said, because the S&P 500 is almost always at all-time highs, you would miss out on a lot of opportunities. So just looking at this chart here again, you can see that after 2010, there are very few opportunities for you to invest just because the stock market just doesn't drop that much, or it hasn't been at least. So yeah, your investment in 2008 would have made you a lot of money, but you'd have missed out on investing more from 2010, 2011, 2012, all those years where the stock market just kept going up and up, which means that you would have missed out on a lot more profits. You made a lot of profits from your first buy, but you missed out on a lot more later on. To give you guys an example, let's say you follow that strategy where you only want to buy when it drops 20%. Right now, prices are at $1,000, so you invest your money. In the next few years, it goes up and up. It goes to $2,000. You feel great. You've doubled your money. Now, a 20% price drop comes. It drops to $1,600, and you invest more money. So it seems good, right? Every time there's a bear market, every time there's a 20% drop, you buy more. The thing is, you could have just continued buying. You could have bought more at 1001, 1002, 1003, 1004, and so on and so forth. And yeah, that's basically the downside of only investing when there's a bear market. The thing is, stock markets, usually at least, especially for the US, it always goes up. So this strategy, to me at least, it definitely does not work. Maybe it will in the future, but historical data is telling us that right now, it just doesn't work. The only way I would do this is I would make a small tweak to the strategy where basically we invest more money when stocks are in a bear market. So let's say right now you want to invest 500 ringgit a month. So every single month you invest 500 ringgit, 500 ringgit, 500 ringgit. As soon as a bear market comes, when prices drop by 20%, you up your investment to 1,000 ringgit. So now to me, this one makes sense. You want to take advantage of cheaper prices, but even if prices continue to go up, you still invest your money. So to me, yeah, this one makes sense. Now, let's compare it to something that's a bit closer. Now we're a bit smarter, we're thinking about it. We don't want to wait for bear markets because that doesn't really come, but we have a new strategy. Basically, we invest every single month, except for months where prices are at all-time highs or within 5% of all-time highs. So if the stock market is within 5% of all-time highs, we stop investing. If it drops below 5%, so let's say 6% drawdown, 7% drawdown, we continue DCAing again. Would we be better off? Over the long run, again, you wouldn't be. You'd be just better off continuing to invest every single month regardless of where prices are. So I got this data from a website called Off Dollars and Data. This graph is a bit difficult to read, but in a nutshell, it's showing us that when the US stock market is at all-time highs, the future returns in the next 1 or 3 years is usually higher than when the stock market is not at all-time highs. So this is just reinforcing what I said earlier in this video. Basically, when the US stock market is at new highs, it's actually a bullish thing, and it's very likely that it will continue going up even higher. And the same can be said for both international stocks and Bitcoin as well. So all of this data, all of this research, it just points to the same conclusion. Basically, for most people, your best strategy is to dollar cost average. It's gonna make your life a lot easier as well. You don't have to think about when to buy, when to sell, blah, blah, blah. Literally, all you have to do is, regardless of where prices are, just keep investing. Sometimes you're gonna buy high, sometimes you're gonna buy low. On average, your cost should be quite good. But over the long run, what's most important is that you're consistently investing your money, which means your portfolio is growing in size. Doing the research for this video, it has helped me out as well. Like I said, even me myself, I was getting a bit uneasy investing my money at these high prices. I was thinking of holding off a bit, wait for a small correction or a small drop before I invest more money. But the truth is, we all just have to admit that no one knows what the future will bring. Maybe in the future, dollar cost averaging doesn't work anymore. Who knows, right? But at the end of the day, we all need an investing strategy, and it seems like the easiest and the best one right now is to just dollar cost average. Just keep investing our money. That will help us build our wealth. So let me know, what are you guys doing right now? Are you taking your profits? Are you buying more? Or are you just doing nothing and waiting to see what the market does next? Thanks for watching this video to the end, guys. If any of you guys want to sign up for Moo, then check out my link. I'll leave it down below. Give me a huge thumbs up if you enjoyed this video and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.